So we're coming off a quarter where we saw a significant increase in equity capital markets activity with $65 billion raised in the first quarter, which is up almost 100% year over year. We saw $8 billion of IPOs, which was up more than 4x from last year in the first quarter. We saw converts and follow-ons both increase by more than 80%. So again, if you look at the run rate of the issuance for the year so far, we're approaching a normalized year. And, thinking about the IPO market, Andy, what have you seen in your space in TMT, and what can we learn from some of the transactions that we saw price in the first quarter?
So like the other sectors, TMT has been quiet for the better part of 2 years. But March was quite a good month, actually. We saw two notable deals come out. Astera Labs raised a little over $800 million, and Reddit did the same a day later, March 19th and March 20th. Both extremely well received. Astera Labs in particular raised the price range twice, then priced above the range, and is currently trading up roughly 100%, so almost a double in the better part of a month. And Reddit similarly priced at the top of the range, trading up about 30%. So a lot more activity. The pipeline is good. Ivana on the road right now, or not we, but they're in the market, expected to price next week. Rubrik, a software company, filed publicly last Monday. There's a 15-day waiting period before they can start the roadshow, so people can surmise whatever timing they may want from that. And we've got about 15 or so names that are actively in the TMT pipeline that are rumored to be coming imminently. So, you have, $1.6 billion of that $7.8 billion, roughly 20% was from the TMT space. And I see it accelerating as we move through the year. We're working on a number of transactions right now in drafting or in TTW that are looking for that, fall window. So I see it accelerating through the rest of the year.
Yeah, and I'd say when you think about other sectors outside of TMT, we're definitely seeing a pickup in IPO bake-off activity, companies revisiting valuations, looking at dual track processes. And it feels like with the returns that we've seen so far, the IPOs year to date are up around 40% on average as of today. So it's great to see those returns that investors really need to get the market moving and continuing to increase over the next couple of quarters. Shifting gears a bit, Ivana, earlier this week, we saw, numbers on the CPI side that suggests we're going to be in a higher for longer rate environment. When you think about the REIT sector, what is the impact of that data on REIT M&A, on REIT capital raising this year? And how do you see things playing out over the next couple of quarters?
Yeah, I think it's really notable. Like, obviously, REITs have historically been very tied to interest rates. We saw this in pretty dramatic fashion at the end of September into October of last year, when we had yields run up about 75 basis points in a very short period of time, and you saw the RMZ dip about 13 to 15%. What's interesting about this latest announcement is really, if you start to look at around early February, which is when the January payrolls number came out and surprised, really that was a time when I think the market started to come around to a fact that we're not just going to get the 6 decreases in rates that everyone was talking about back in January. And so around February, we had people starting to reset and realize we're going to be in this higher for longer. I think what that's done for the REIT sector right now, which is interesting, is it's finally allowed people to get closer on pricing for acquisitions. So private and public markets have been able to come together. We've seen some big acquisitions with large private sponsors coming into the public space, taking advantage of pricing, and also within some of our corporates buying assets, able to come and buy assets at reasonable levels now because they're able to come together in terms of pricing. So in terms of how much we're going to see from a issuance standpoint, I think there's still some challenges based on where people's valuations are. A lot of folks are still trading below NAV, but if they're able to buy cheaper, they can issue cheaper. So we are seeing activity on ATMs. In fact, Q4 was a record for ATM activity in the REIT space, even considering for a quarter, even considering 2021. So I think that's a good sign, some cautious optimism.
Great. And in that same vein, when you think about rates being higher for longer, one of the things we saw last year in the utility space was significant issuance of the convertible bond product as people looked to manage short-term EPS and had bonds that were coming due. What do you think is the opportunity in the REIT space? And do you think REIT issuers will think about convertible bonds given the higher for longer rate environment?
I do. There's kind of two parts to it. One is the necessary condition of higher for longer. I think if people knew they could just go back and tap the bond markets right away, they would just wait it out. But knowing that we're going to be in this longer rate environment means that people need to be a bit more creative about their financing. But second, it's really where people's reference price is. Some of the more traditional sectors in the REIT market, like obviously office, some housing, some retail, their shares aren't at a place where even 25 or 30% up, they'd be interested in issuing equity. But for a few of the sectors that are probably 15 to 20% of the universe, I think that's where it starts to look really interesting. If they're able to refi debt, save 150 to 200 basis points, potentially over-raise some for growth capital if it's available, that's when it becomes interesting, and that's what we've seen.
I think beyond the IG space, from a convertible standpoint, what we've seen is just tremendous demand for the product in the first quarter, and we expect that to continue. And I think we're going to see more companies explore that option as a way to refinance as their maturities start to creep up on them in 25 and 26. So, we expect the convertible market really not only in the IG world, but in the broader world to be very busy the rest of the year, just given investor appetite, given where equities are trading right now, and just given the overall demand for the product. Flipping back to you, Andy, when you think about sponsors and the monetizations that we saw in the first quarter, what have you seen in your space, and what do you expect to see the rest of the year as we think about where else capital markets activity might come from?
So if the first quarter is any indication of what to expect, then we would expect it to accelerate as we're seeing with the other products. There were 47 follow-ons or blocks in the first quarter that were sponsor-led monetizations. That's up 250% year over year in terms of proceeds for the quarter, and up 60 or 70% in terms of number of deals. So that's clearly been very active, certainly on a relative basis, and much more in line with what we've seen historically. As a case in point, just to give you a sense of the acceleration, we participated in 2 blocks in the last 2 weeks for Apollo on the monetization of TD SYNNEX. We did $1.3 billion for them at a price of $109, and a mere week later, with the stock trading higher, we did a $600 million cleanup block for them at $115. That's the third monetization they've done this calendar year. Total proceeds $2.7 billion, not insignificant. So clearly the path is open for monetizations for sponsors through that vehicle.
Great, thanks. Well, look, I think what we can all agree on right now is that equity capital markets to remain open across the board for 2024. So if you're looking to do an IPO or follow-on or convertible bond, please reach out to your Mizuho banker or capital markets coverage person.